Hey everyone, it's Scott Kuru here with another daily property update. Now there was a big change in 2023 to the tax rules that you need to know about, especially if you built a brand new property for investment purposes, because in 2023, the rules changed. The reason I'm doing a daily property update on it today is that the information is simply not out there, and I'm coming across many tax accountants that are not aware, and I'm coming across hundreds of property investors that are not aware of this change. So this daily property update is to bring your awareness up to where it needs to be so that you can be a property insider. So guys, if you want information like this, make sure to hit the like button, hit the subscribe button. I come to you every single day with a 3 to 5 minute update, what's happening in the property market, the information you need to know to be a property insider and help you towards financial freedom. Now, this all relates to tax deductions when you build a brand new property for investment purposes. You see, back in 2019, the ATO came out and said that if you were building a brand new property for investment purposes, the interest expense on the land and the interest expense on the build during the period of construction was not tax deductible. Okay, and what that meant was anyone who was investing in a brand new property and building a brand new property, they were losing $2,000, $3,000, possibly $5,000 in tax deductions that they would normally be able to get pre-2019. Now, this was challenged in the courts and ultimately some back and forth, and I'll put a link below to a little bit of history if you want that history as to how all this happened. But in 2023, the ATO did rule that they would bring back the tax deductible status of the build. So yes, the interest expense on the land during the build is not a tax deduction, but the interest expense on the build is a tax deduction. So it's very, very important that if you're a property investor that's invested into brand new property at any time from now back to 2019, you may not have claimed this expense. So what you need to do is go to your accountant and check and put a claim in. Now, typically you can only go back 2 years, okay, to actually make this claim. But in this case, you may have a case with the ATO to go back more than 2 years. So speak to your tax professional. Now, this information comes to me from my personal tax accountant who gives me my personal tax affairs. Yes, I do pay a lot of money to get advice from, one of the big 4 consulting firms here in Australia. But I've also got my personal tax advisor, and that's Daniel Lee. Daniel Lee actually did work for the ATO for 5 years, so he's got all of that insider knowledge, which is very, very important. He was working for a big 4 consulting firm for 4 years, and for the past 5 years, he's been advising me, my business partner, many of my inner circle, a lot of our clients, and in fact, he's an expert at setting up and maintaining a self-managed super fund. And I'll put a link below in the description as well to MySMSF.com, which is a business that Daniel runs to help people to set up SMSF and maintain SMSF. So guys, if you are in that boat, if you have built and constructed a brand new property for investment purposes since 2019, double check this, speak to your tax accountant. So guys, if you like this update and want more information like this so that you can be a property insider, hit the like button, hit the subscribe button, and I'll see you guys tomorrow at the next daily property update. Take care, everyone.